New high here for the S&P and the Dow, and this is a decisive breakout. Friday may have been a very, very important day. I just want to show you the S&P 500, because remember the old high, 3025, that was back in July, and the important thing is we're now 1%, more than 1% above that, and we're getting in the area what I call a decisive breakout, and the important thing is we're seeing breakouts in sectors that are important, cyclical sectors that people want into. So take a look today, new highs. This is not just the Dow and the S&P, these are sectors. The industrials, tech, two classic cyclicals, communication services, because we're seeing media doing well, financials new high, and there's Europe. EFA is the ETF for that. This is European stock market, also 52-week high. So these are significant breakouts that we're starting to see. I think the important thing is we've dodged a bit of a bullet. Remember, September and October, they were supposed to be lousy months. Below expectations, always usually loser months. September's up almost 2%. October was up 2%. So all of the historical patterns really didn't hold, and that's certainly been the reason that we're hitting new highs right now here. So why are we hitting new highs? You know about the trade optimism. You know about the Fed being generally supportive of the market overall. But I think the important thing was Friday, better economic data, not just the U.S., but in Europe as well as China. And that may have start changing people's attitudes about earnings in 2020. Remember, the motif here has been, oh, earnings estimates are too high, 10% for 2020. They have to come down. The market's been sort of working on flat to maybe up mid-single digits. But wait a minute, if the economic data stabilizes, or heaven, it goes up a bit higher than expectations, well, all of that could be wrong, and that means the market may not be too high priced. That means things may be better. So people are starting to wonder what exactly that data is that we've gotten on Friday, particularly in Europe and China. And the question now is, are we going to see efforts to or ability to have that continue, the strong economic data? That's the question right now for the markets. The big issue, of course, is December. Everybody's afraid of December last year and what happened. I just want to point out again, we've been saying this for several weeks now here. November was the #2 month historically. It's up 2 out of 3 times. The start of the best 6-month period. So the seasonal patterns are on our side. As for that December last year, it's true we were down, what, 16 or 17%, put up the S&P 500 from the high. The high was in October of last year, all the way down. There we are. That's about 16% decline overall. And the important thing here is it's different this time. Fed was in a hiking mode last year. The data, economic data, was generally moving to the downside. It seems to be a little more stable right now. And earnings were thought to be way, way too high at that time. So a little bit different mindset now than there was last year. Finally, on the IPO front, not a lot going on, but we've got 8 or 9 of them this week, small ones, but one really big one. This may be the biggest Canadian IPO ever. Big company called GFL Environmental here on Thursday, recycling waste management. And look at this. This could be $2 billion here. We'll keep an eye on that. Again, good year for IPOs, not a record, but still a pretty good year.